Hey Jeff, Zach, thanks for joining me.
Good to see you, Thanks for having me.
Hey, so we've got a question that some folks are asking with really kind of record lows in housing affordability, prices continue to go up in residential housing. Um, is the housing market going to crash? And the answer we're getting from most housing economists is no. It's prices could obviously decline. That wouldn't be a shocker, and we've seen it in some markets as well as seen some markets keep going up. But it's not likely to crash. And part of that kind of goes to housing supply that we're not looking at '08 where they've kind of really, lowered credit quality or done, really suspicious type loans. Um, just so the lending standards have stayed up. The foreclosure activity isn't that muted. You can look at transaction volume and other things, but there's a lot of things just going to folks saying, it's not likely to crash. Your thoughts as we see this kind of topic come up.
You want to go first? Yeah, I mean, doesn't matter. I thought you were going to go, so but I'm happy to go. Look, I think you hit all the high points there. There isn't enough inventory. Builders can't build quick enough to meet the demand. But I would add something probably a little different to it is this is also market driven. If you're in a in an area where people want to be, sure, you're not going to see housing crashes. But if you're in an area where it's where nobody wants to be, you might see some touches of crashes.
Well, one key point that we didn't touch on, or the article didn't touch on, is interest rates.
Yeah,
And as those come down and houses become more affordable, you're going to have a glut of buyers. Not You'll have sellers too, and hopefully it'll release a logjam of supply constraint. But when you have sellers and buyers meet and you have a supply and demand balance in the market where things are affordable, it's not likely housing prices will go down. It might even get more competitive again and push prices up.
yeah. I was gonna say
Um,
you might go the opposite way.
so
Keep
I
going.
think that you're not going to see a crash.
Yeah, I would also weigh in that I think people kind of have to adjust their thinking post '08 because the level in the market got synchronized in 2008. It's just a real abnormality. And it's just the wrong way to look at real estate as one unified national market. And then that's something that you guys have been pointing to here also. You really need to look at your local markets. And I don't think anybody really who's understands the market is expecting another '08 type event. Um, but that doesn't mean an individual market couldn't have a fair amount of risk. And that's really, I think, how you need to approach this is looking at your individual market and maybe not pay so much attention to trying to find some sort of national trend that's going to drive everything.
I'll point out one other thing that just dawned on me is most of the employment that we see, most of the businesses are sitting on stockpiles of cash, waiting for interest rate environments to become more friendly. They're not likely to lay off tons and tons of workers. The most affected workers will be service industry, hospitality related, more hourly or lower salary than most, which means that, that which gets most affected would be apartments. Those are renters. Those are not owners. So I think that even if there was a recessionary environment or a raise of the unemployment levels, you're still going to see people with jobs, with income that are still buying houses. And I think it's still going to go the other way. I don't think you're going to see a pullback like 08, 09. I think you're right that that was an anomaly.
Yeah, I mean, look, you touched on it already, Steve. The anomaly was really more the fact that it was just a lot of bad lending. A lot of fraudulent lending, from the side of borrowers just giving false information that now has to be verified and has to be managed appropriately. So it's not the same thing.
Okay, thanks for the insights, guys. If you enjoyed the video, give us a thumbs up. Click subscribe if you haven't already, and visit our website, selectfincap.com, and register to get a look at exclusive real estate investment opportunities in the commercial space. Thanks a lot.
Thanks,
Thanks,
Steve.
Steve.